Now, it was reported this week that the giant US-based toys and games retailer, Toys R Us, is looking to enter the Irish market and to establish up to 6 new franchise stores here. Other international retailers are also understood to be planning to come here for the first time or to expand existing operations. So is a sustained recovery in the retail market underway here, and is it likely to extend beyond the Greater Dublin region? Larry Brennan is Head of Commercial at Savills Real Estate Agents and joins us now in studio. Good morning, Larry.
Yeah, morning, Vincent.
Are we looking at a sustained recovery in the commercial retail sector here yet, or is it a bit early to say yet?
Well, I think we've been seeing like-for-like year-on-year sales growth for the last probably 2 years. We've been predicting sort of an increase in demand, and we are seeing new names into the market. We're seeing a significant pickup in terms of requests and searches and tours by retailers. So yeah, it's been going on quite a while, slowly, but it is picking up, and we are seeing some good brand interest now at this stage. But sorry, the only thing I would say is it's not only new guys. There's also an awful lot of Irish retailers again beginning to re-engage with us. We track an index of people already present in the market, and last time we surveyed that index was the end of February this year, and I think that the figure was 74% of that basket of 300 plus retailers were now saying they were back engaged in the market and back again prepared to look.
When you say engaged in the market, actually looking to expand?
Well, yeah, open to considering opportunities, which is a huge change from where we've been. So yeah, it's very, very positive for the market. So it's not only the new, it's incumbent retailers who are again now saying they're confident enough again to look and reinvest in the sector.
Can you give us any sort of a flavour as to the type of retailers that might be looking to come in here for the first time?
Well, I suppose that's what I do. So there's different sectors and different areas. You mentioned Toys R Us in the reports during the week. Retail it's kind of multifaceted. There are different sectors. There's retail warehousing, which is where Toys R Us will sit. And again, we've seen some UK demand there. The likes of DFS have come into Ireland, have traded very, very well. On the back of that reports back into the UK. And we have seen other furniture and other UK interests stemming from that, which is a real positive. And also one DIY operation as well, a home operation coming out of there, which is very, very positive. Again, you have the likes of Deals coming into Ireland, which is the Poundland UK company, performing exceptionally well. That trickles down, and their sector, again, we've seen sectoral demand from that area and a lot of interest there. But again, High Street, we've seen good brand interest in High Street. In Grafton Street, for example, we reported at the end of last year that Grafton Street was full from the first time since 2007, I think. Again, we've had a couple of people come off the street then, but they'll be rapidly full. I believe everything that's available on the street is currently under offer. And you'll see, I would more international brand focus on Grafton Street, and you'll see some international brands there. So it's sectoral, it's across all areas, even food. You mentioned the recent conference. There was the Completely Retail conference in Dublin at the end of February. You'd retailers like Iceland, who have been in Ireland for some time under franchise operations, now company controlled from the UK, and hugely expansionary and hungry for space.
Now, all this seems to reflect a growing confidence that the consumer is back, more disposable income, and yet retailers themselves say that while volumes are up, the value isn't. That people are still very cautious as to how they spend. So, are retailers still cautious at the back of things as well?
Well, as I mentioned to you, what we're hearing is, yes, outwardly, yes, caution is there, and that's right. But you have to get volumes up before you can start looking at price increases. Certainly the food sector is certainly based on deep discounting. I mentioned to you the likes of Deals. It is value-driven sales at the moment. But, once we get volumes up, which is the key, then perhaps is the opportunity to try and start improving margin and driving margin.
Are we going to see more buoyancy in the provincial towns and cities, or is this confined really to prime retail areas in Dublin or along the M50?
Well, again, sectoral, right, is really the answer to that. Again, you have to remember the power of the internet and the impact of the internet, certainly on the fashion market. And that's what we're seeing is brands will now be major urban centre led. So, and fashion brands are driving the fashion business at the moment. But, food demand, sectoral demand, value-led retailing, yes, that's across the country. But so it very much depends on which sector you're talking about.
If you walk through a provincial town in Leinster still, though, you see a huge amount of vacant outlets. Is that likely to recover soon, or is out of town probably the first to recover?
Well, let's face it, we do have areas that are hugely overshopped, and they are going to take an awful long time to repair. Particularly, we had this strange anomaly in Ireland where you had county boundaries converging, and you had competing shopping centres built on either side of a county boundary in a town that already had a good shopping provision, and those towns are there's quite simply too many shops for the people that are there. They're going to be a challenge going forward. But well managed towns that have been protected, I think, are doing quite well.
In the areas where we are seeing buoyancy and perhaps further expansion, what's that doing to rents?
Well, occupier demand is going to lead to hopefully rental recovery, but we have a long way to go.
How far off the peak are we at this stage?
Well, we saw rents again, prime rents come off the peak by 60%. Very, very significant, and that was in prime sectors. Arguably in a provincial town where literally nobody wanted a store, who knows where rents came off the levels they were at. So there's an awful long way to go back. And also, there's tenant concessions, different things that have to be chipped away at before we see real rental growth in certainly provincial areas. But Dublin, we are seeing it already. Grafton Street, we've seen rents move on quite strongly in the last 12 to 18 months. But it's unusual. It's down to store size, literally location from one end of Grafton Street to the other. And whether you're talking about a shop of 500 square feet or 5,000 square feet, there's very different rental profiles in those stores.
So significant pickup, but in very targeted sectors, very targeted markets, very targeted locations.
Yeah, I think that's a good way of describing it. Yes, but certainly prime very, very good, and yes, certain sectors are performing very well.
Larry Brennan of Savills, thanks for joining us this morning. Coming up, the mega fees being generated by the current global mergers and acquisitions frenzy. Stay